You too, what's good? It's your boy, the Composite Kid, coming at y'all with another YouTube video. Make sure y'all like, comment, subscribe if y'all is new to the channel. Make sure y'all follow me on X, where I do post my setups live. Sometimes, but most of the time, if you want every setup I take, make sure you just join the TDT trading community. The link is gonna be on my X in my bio. But today I'm gonna be giving y'all a trade recap on Fartcoin, just telling y'all why I entered this trade setup. As y'all can see, right now we're currently sitting in profit. It's a potential 9% gain in a single trade, but this could always fully reverse, stop me out at break even, right? Just because it's looking good right now don't mean it's gonna play out, but if it plays out, then I already posted the trade recap, so I'm just trying to stay ahead. But looking at Fartcoin, right, starting on the higher time frames, y'all can see I did give out an accumulation schematic right around here that y'all could have took all the way up towards here, and then you could take the distribution schematic right now to hedge your position, right? But we were in the uptrend, right, creating higher lows and higher highs. But whenever you're in the uptrend, you always pull your range from top to bottom, right? We're in the uptrend, creating higher lows and higher highs. And whenever in the uptrend, you pull your range from top to bottom. Let me just delete all of this. Matter of fact, I ain't gonna delete it. I'm gonna save it. I'm gonna just save it. Hold on. Okay. Okay, so we're in the uptrend. So y'all can see we got a higher low, and then we end up getting a higher high. At this moment in time, you pull your range from top to bottom, and this is your range. This is a valid 6-hour range, right? Then, as y'all can see, we got a deviation, and we immediately got acceptance back inside of the range. So when we get acceptance back inside the range, and we see that this is a valid deviation, even looking at our deviation limit tool, we can extend this tap towards the second tap just to make it look better, or you can keep it right here. But I'm gonna extend it as of right now, and we can look for a potential model 2 distribution schematic or a model 1 distribution schematic, right? So we got our initial range high, we got our sweep of the range high. Now, from a model 2 perspective, price would either have to tap into extreme supply or mitigate extreme supply, or sweep extreme liquidity. So what you do is you just mark out your extreme liquidity and your extreme supply. In this situation, we had no supply, right? We had no extreme supply from our second tap, but we did have extreme liquidity. So looking at our higher time frame extreme liquidity pool, it's just obvious. You can clearly see that this is our extreme liquidity right here. So after we come in and we grab that extreme liquidity, what happens? We end up getting a breaking structure back to bearish. Right here, confirming this as a model, right? Not a high probability setup because we did have this aggressive move higher, but it is a valid model. And then right here, we end up kind of breaking that low. Right here, we kind of SFP'd it, we wicked it. And then right here, we kind of got that breaking structure back to bearish. Alright, so this could be your third tap POR, and you could have already entered, but we do have demand resting below, so we do not enter trades when there is room for error. So we have to wait for this mitigation of this demand POR. What happens? We mitigate the demand and we get a bounce. After we get that bounce, now I look for the most extreme supply or liquidity POI that got created on this third tap. And as y'all can see, the most extreme liquidity POI is just that first higher low or lower high for a lower low. Looking at your market structure, you got All of this is just one move down, right? Because you don't have two consecutive bearish candles and then two consecutive bullish candles. Right here, you got one aggressive bullish candle and one aggressive bullish candle right there. It's not two consecutive. So you'll pull your market structure from here. This will be your low. This will be your lower high for your lower low. So this will be considered your extreme liquidity POI. What happened? Price came, tapped into that extreme liquidity POI, and then looking at your market structure from the bottom coming towards that liquidity POI, you get your breaker structure confirmation right here to go short. Now on this breaker structure confirmation, there's no demand, right? There's no demand. There's nothing but sell side liquidity until we get all the way probably like around right here. There's like some tiny demand right here, and then we have demand lower. So you can enter this trade setup right here on this breaker structure, put your stop above that third top, and then you can target the range low for a potential 9.33% gain in a single trade. What makes this trade high probability is it's in confluence with all the majors right now. Looking at total, we're coming towards supply, starting to have like a rounding top. USDT, we kind of having a rounding bottom, kind of in the accumulation schematic, kind of low time frame though. BTC coming into resistance, sweeping liquidity, just overall having such an aggressive move the past 2 days. We can expect, some type of retracement. And then Ethereum ended up coming into the supply POI, sweeping that high. And then I had the third top POI marked out, but Ethereum sometimes like to front run the third top POI. So that's what it looked like it's doing right now. Could we pull back and grab that liquidity POI? Yes, we could always come back. We can always sweep the high and then go back lower. I would like to just continue to get the move down. I think that's probably better for us. But also on the breaker structure, on your breaker structure confirmation, you left behind supply, right? Protecting price from coming towards your stop loss. I didn't enter this trade on the breaker structure. I waited a few minutes and then I entered somewhere over here. I'm not 100%. Wait, I just saved my position so I can show y'all actually where I entered. Okay, I don't know what happened to my position, but basically, yeah, that's the setup, and that's the reason I entered the trade. I got my confirmation. It's my model. I trade it. It's a very high win rate model. This one trade does not mean nothing. I win this trade, cool. I lose this trade, cool. It's just about consistently taking these high probability setups and over time being consistent, being, you know, a consistently profitable trader. It's that simple. But we also had a nice return to zone, and whenever you take these high probability setups, you want to make sure you have that nice return to zone. If you look at the return to zone, it went all the way coming right into our breaker structure, right? Because like I said, there was no demand to hold price lower. So this is a beautiful return to zone, nothing but higher lows, sell side liquidity, giving price a reason to go lower. Um, and yeah, hopefully I was able to, take some gems from this. Um, a lot of the times, say you don't enter right here, price will more than likely come back and grab that extreme liquidity or tap into some supply that got created on the third top, right? And that kind of be like your last point of supply from a white cost standpoint. So whenever you looking for looking for that test or that lower high for that lower low, once you already got your third top confirmation, just try to find that extreme liquidity POI. Price like to go and grab that extreme liquidity POI. But I hope y'all enjoyed the video. Make sure y'all like, comment, subscribe if y'all listening to the channel. Check out the links in the description. Follow me on my X. And I'm going to catch y'all in the next video. It's me, your boy, the Composer Kid. And I'm gone. Peace.